Hello everyone, I'm Kartika. Welcome back to Let's Learn. So, if you are new to this channel, please subscribe the channel and click the bell icon to get the latest notification. So, as you know, today's video is about economic value added. Okay, so let's start the video. Economic value added. Okay, EVA is a comprehensive measure of operating performance. Okay, so EVA is a incremental difference in the rate of return, that is ROR, over a company's cost of capital. So, what is the purpose of economic value added? EVA is used to measure the value of a company generates from fund invested in it. Okay, so if a company's EVA is negative, it means that the company is not generating value from the fund invested into the business. And if the EV is positive, it shows that a company is producing value from the funds invested in that company. Okay, so let's see the features of economic value added. First feature is that it is a value based financial performance measure. Second, we can say it is a measure reflecting the absolute amount of share value created or destroyed during each year. Third feature is that it is a useful tool for choosing the most promising financial instruments, and also we can say that it is an effective protection against shareholder value destruction. Another feature of EVA is that it is a tool suitable to control operation and also a measure highly correlated with the stock prices. So these are the main features of economic value added. Okay. So now let's see how to compute economic value added. Okay, so economic value added is equal to NOPAT minus weighted average cost of capital into total capital employed. So what is NOPAT? NOPAT is net operating profit after tax. Okay, and capital employed is equal to equity plus long-term debt. So we can calculate NOPAT in two different ways. First one is NOPAT equal to operating profit into 1 minus tax, and also NOPAT is equal to EBIT into 1 minus tax. EBIT is earnings before interest and tax. Okay, so by using these two formula we can calculate NOPAT, and to calculate EVA we use NOPAT minus weighted average cost of capital into capital employed. Okay, so to understand this better we can do some problem. Okay, so the first problem is given here. It is an extract from income statement of Karma Limited which shows the following. So here in this question it is given that the operating profit is 10 lakh and interest charge is 1 lakh. So the profit before tax is 9 lakh. Okay, 10 lakh minus 1 lakh which is equal to 9 lakhs. And we are deducting 25% tax from it, that is 2,25,000. So we get profit after tax as 6,75,000. Okay, and we are asked to calculate the NOPAT. Okay, so let's calculate NOPAT. Okay.
First problem, it is given that the operating profit is 10 lakh and the interest charge is 1 lakh. Okay, and profit before tax is 9 lakh. Then we are deducting tax of 25%, that is 2,25,000, and we get profit after tax as 6,75,000, and we are asked to calculate NOPAT. Okay, that is net operating profit after tax. Okay, so we know that NOPAT, that is net operating profit after tax, is equal to operating profit into 1 minus tax. Okay, this is the formula. NOPAT is equal to operating profit into 1 minus tax. Okay, so here we know that the operating profit is 10 lakh which is given in the question. So 10 lakh into multiplied by 1 minus tax. 1 minus tax is given as 25%, so it is 0.25. Okay, so when we calculate we get 10 lakh into 0.75. Okay, 10 lakh into 0.75 which is equal to 7,50,000. So NOPAT is equal to 7,50,000. Okay, I'll explain once more. To calculate net operating profit after tax, the formula is operating profit into 1 minus tax. It is given that the operating profit is 10 lakh and tax is 25%, that is 0.25. So 10 lakh into 1 minus 0.25 is equal to 10 lakh into 0.75. When we multiply, we get it at 7,50,000. Okay, so this is one of the method to calculate NOPAT. Now we can see the second method to calculate NOPAT. Okay, so the second method is calculating NOPAT is equal to net profit plus net interest into 1 minus tax. Okay, this is the second method. In first method, we used NOPAT is equal to operating profit into 1 minus tax. Okay, this is the first formula we used. So in second method is to calculate NOPAT is net profit plus net interest multiplied by 1 minus tax rate. Okay, so we know that the net profit is equal to 6,75,000. Okay, the net profit is equal, that is profit after tax, is equal to 6,75,000. We already calculated, which is already given in the question. So plus the interest, net interest is 1 lakh, the interest charge, that is 1 lakh. So we have to add 1 lakh. Okay, and multiplied by 1 minus tax is 0.25. Okay, so when we compute this, we get it as 6,75,000 plus 75,000. Okay, which is equal to 7,50,000. So this is the second method to calculate NOPAT. Okay, so in the first method, we calculated net operating profit after tax using the formula operating profit into 1 minus tax. We can also use the formula net profit plus net interest multiplied by 1 minus tax. Okay, so I hope it's clear to you all.
So I hope the first question is clear to you all. So now the second question. Here it is given that the sales is 1,80,000, cost of goods sold is 80,000, depreciation and amortization is 85,000, and the tax is charged at 30%. Okay, and we are asked to calculate the NOPAT. Okay, so let's calculate the NOPAT.
The second question, it is given that the sales is 1,80,000, cost of goods sold is 80,000, then depreciation and amortization is 85,000, and the income tax charge is 30%. Okay, so we are asked to calculate the NOPAT. So first we can write the sales. Sales is given as 1,80,000. Okay, from that we are deducting cost of goods sold. Cost of goods sold, which is given as 80,000. So we are deducting that, and we are also deducting the depreciation and amortization. Okay, depreciation and amortization is given as 85,000. So we are deducting that also, and we get 15,000. So what is this 15,000? 15,000 is our gross profit. Okay, so 15,000 is our gross profit. So from sales, we deducted cost of goods sold and depreciation, and we got gross profit as 15,000. And from gross profit, we are deducting the tax, which is 30%. So we are deducting 4,500, and we get the amount 10,500. So this 10,500 is our NOPAT, that is net operating profit after tax. Okay, so I'll explain once more. First we calculate sales, and we deduct the cost of goods sold and depreciation. So we got the gross profit as 15,000. From gross profit, we are deducting tax at 30%, which is 4,500. So when deducting, we get 10,500 as our NOPAT. Okay, so this is our NOPAT. I hope it's clear to you all.
So now let's see how to calculate the capital employed. Okay, so in this question it is given that net working capital is 20,000 and net fixed asset is 60,000, and is asked to calculate the capital employed. So let's calculate the capital employed.
So in the third question, it is given that net working capital is equal to 20,000 and net fixed asset equal to 60,000, and we are asked to calculate the capital employed. Okay, capital employed. So the capital employed is equal to net working capital plus net fixed asset. Okay, that is 20,000 plus 60,000, that is 80,000. So 80,000 is the capital employed. Okay, I repeat once more. In the question it is given that net working capital is 20,000 and net fixed asset is 60,000, and we are asked to calculate the capital employed. And the capital employed is net working capital plus net fixed asset, and we are calculating it 20,000 plus 60,000, and we got 80,000 as capital employed. Okay.
So I hope it's clear to calculate the capital employed. Now let's see how to calculate the weighted average cost of capital. Okay, so in the fourth question is given that equity cost of capital is 14%, cost of debt is 9%, and the market weight shows 65% debt and 35% equity, and we are asked to calculate the weighted average cost of capital. Okay, so let's calculate it.
So in the third question, we are asked to calculate the weighted average cost of capital. Okay, so in the question it is given that equity cost of capital is 14% and cost of debt is 9%. But the market weight is 65% debt and 35% equity. Okay, so to calculate the weighted average cost of capital, we have to calculate cost of equity into market weight plus cost of debt into market weight. Okay, so here we know the cost of equity. Cost of equity is 14%, which is equal to 0.14, and we have to multiply it market weight, and the market weight is 65% debt and 35% equity. So 35%, that is 0.35. Okay, then we have to add this with plus cost of debt. Cost of debt is 9%, that is 0.09 into market weight. Market weight is 65%, so it is 0.65. Okay, so by calculating 0.14 into 0.35, we get 0.049, and we have to add it with 0.09 into 0.65, 0.65, which is equal to 0.0585. Okay, so while adding both, we get the answer as 0.1075. Okay, we can say it is as 10.75%. So this is our weighted average working capital. Okay, so I repeat it once more. It is given that equity cost of capital is 14%, cost of debt is 9%, and the market weight is also given as 65% debt and 35% equity. To calculate weighted average cost of capital, we have to multiply cost of equity and the market weight and add it with cost of debt into market weight. Okay, so if cost of equity into market weight is equal to 0.049 and cost of debt into market weight, we get it as 0.0585. So when we add both of these, we get it as 0.1075, which is 10.75%. Okay, so I hope it's clear to you all.
So we now learned how to calculate the NOPAT, how to calculate the capital employed, and also to calculate the weighted average cost of capital. Okay, so now let's see how to calculate the economic value added, the main topic. So we have reached that point to calculate the economic value added. Okay, so it is given in the fifth question that the total asset is 10,000, return on total asset is 30%, and cost of capital is 10%. Okay, and we are asked to calculate the economic value added. So let's go and calculate the economic value added.
In this question it is given that total asset is 10,000 and return on total asset is 30% and cost of capital is 10%. Okay, and we are asked to calculate the economic value added. So as we all know, economic value added, EVA, is equal to net income minus capital charge. Okay, net income minus capital charge. We can use this formula to calculate the EVA. So to find the net income is equal to 30% of total asset. Okay, so that is 30 divided by 100 into total asset is 10,000. So 30% of 10,000 and we get 3000. Okay, 3000 is the net income. Okay, now let's find the capital charge. Capital charge is equal to 10% of total asset, which is equal to 10 divided by 100 into 10,000, which is equal to 1000. Okay, so we know that EVA is equal to net income minus capital charge, which is equal to 3000 minus 1000, and we get the answer as 2000. So 2000 is our economic value added. Okay, so I will explain it once more. In the question given, it is that total asset is 10,000, return on total asset is 30% and cost of capital is 10%. And we are asked to calculate the EVA. So EVA is net income minus capital charge. Okay, so to calculate the net income, it is given that 30% of total asset. So total asset 10,000 and we take the 30%, we get 3,000. And capital charge is 10% of total asset and total asset is 10,000. So taking 10% we get 1,000. So economic value added is net income minus capital charge. So which is 3,000 minus 1,000, we get 2,000. So 2,000 is our economic value added. Okay.
Okay, so I hope it's clear to you all. Now let's do one more problem to calculate the economic value. Okay, so the following information is available of a concern. Calculate the economic value added. Okay, so it is given that 12% debt is rupees 2,000 crores. Equity capital is given as rupees 500 crores. Reserve and surplus is given as 7,500 crores. And the risk-free rate is 9%. Beta factor is 1.05. Market rate of return is 19%. Equity risk premium is given as 10%. And operating profit after tax. Profit after tax is given as rupees 2001 crore and the tax rate is 30%. Okay, so let's calculate the economic value added. Okay.
First we have to calculate the cost of debt. Okay, so cost of debt is equal to interest into 1 minus tax. Okay, so the interest is given as 12% multiplied by 1 minus tax. 1 minus tax is 30%, that is 0.3. So after calculating this, we'll get as 8.40%. So this is the cost of debt. Okay, so now we have to calculate the cost of equity. Okay, so cost of equity is equal to risk-free rate plus beta into market risk premium. Okay, and market risk premium is given in the question. So risk-free rate is given as 9% and beta is given as 1.05 into 19% minus 9%. So after calculating this, we'll get it as 19.5%. Okay, so 19.5% is the cost of equity. Okay, so next in the question it is given that debt equity ratio is 20 and 80%. So it is given in the question. So now we have to calculate the WACC, that is weighted average cost of capital. Okay, so as we all know, WACC, that is weighted average cost of capital, is equal to cost of debt into percentage debt plus cost of equity into equity percentage. Okay, so as we all know, cost of debt we calculated it as 8.40% and we are multiplying it with the debt percentage. So debt percentage is 20%. Okay, and we have to add this plus cost of equity capital. Cost of equity capital is 19.5 we calculated into 80% of equity, that is given in the question. Okay, so adding this we'll get it as 17.28. percentage is the weighted average cost of capital. Okay, so we found the weighted average cost of capital, and in the question it is given that operating profit before tax. Operating profit before tax is given as 2100 crore. It is given in the question. Okay, it is given in the question. Now we can calculate the economic value added, EVA. So we all know EVA is equal to NOPAT, that is net operating profit after tax minus cost of capital employed. Cost of capital employed. Okay, so that is equal to 2100 crore minus 17.28, that is WACC, into 10,000 crore. Okay, so we calculate it and we'll get it as 2100 crore minus 1728 crore, which is equal to 372 crore. Okay, so this is the economic value added. Okay, I hope it's clear to you all.
So yes, we learned to calculate the NOPAT, we learned to calculate the weighted average cost of capital, we learned to calculate the capital employed, and also how to calculate the economic value. Okay, so if you have any doubt, please comment it down, and if you want to solve more questions on this, please comment it down. Okay, I'll be making one more video on that. So now let's see what are the advantages of economic value added. Okay, so first advantage is that it helps the managers to make better investment decision, and EVA is a tool which helps to focus managers' attention on the impact of their decision in increasing shareholders' wealth. Okay, so it can be used as a basis for valuation of goodwill and shares, and it considers long-term as well as short-term benefits of the company, and is also an effective measure of the quality managerial decision. So these are the advantages of economic value added. Okay. So in this video, we discussed about economic value added, where we studied that economic value added is a comprehensive measure for operating performance, and it is an incremental difference in the rate of return over a company's cost of capital, and it is used to measure the value a company generates from the fund invested in it. And we also learned that if EVA is negative, it means that the company is not generating value from the fund invested in it, and if the EVA is positive, it means that the company is producing value from the fund invested. Okay, and we then learn some of the features of economic value added, that is, it is a value based financial performance measure. It is a useful tool for choosing most of the promising financial instrument. It is a tool suitable to control the operation. So these are some of the features. Then we also learned how to calculate the EVA. So EVA is equal to NOPAT minus weighted average cost of capital into total capital employed. Okay, and we also learned how to calculate NOPAT. Okay, we learned two formulas. First one is operating profit into 1 minus tax, and also EBIT into 1 minus tax. Okay, and we did some problems to calculate NOPAT, to calculate capital employed, WACC, and also we finally calculated economic value added. Okay, and we also discussed the advantages of economic value added, as it helps the managers in better investment decision. They helps to evaluate the goodwill of the goodwill and shares of a company. It considers long term and short term benefits of the company. So these are some of the advantages. Okay, so yes, that's it. So if you like the video, give it a big thumbs up, and also share the video to all commerce students you know. And there is a Telegram channel to get all this PDF. The link is given in the description box. Please check it out. Okay, and if you have not subscribed to Let's Learn, please subscribe to Let's Learn and click the bell icon to get the latest notification, as I am uploading a commerce video on a daily basis. Okay, so and don't forget to give your precious feedback under the comment section. And for more commerce video, keep watching Let's Learn. Thank you.